Good morning, everyone. David Paul speaking. It's 20 past 10 here in the UK on Friday, 14th of August. A very, very poor start in Europe. Virus worries have resurfaced, as I'm sure you've all read, and especially travel stocks have been thumped through the floor this morning. The FTSE 100 is down 2%, and pretty much everything is underwater from yesterday. At the close on Thursday the 13th, Vectorvest advocated caution, and certainly folks, with that very strong down day on the market, I think it's a day to sit on hands and wait out. The American market not down nearly as much, down 0.5%. The futures are down 0.5% and could easily be actually coming back to have another spring, another push at that 3,400 level. So let's set it out today. I haven't done much since the last time I spoke to you, but done a little bit maybe. I bought into Sylvania. I think I reported that, and I also bought into Hilton Foods during the course of the week. So let's chart both of those. Sylvania is in fact up a little bit this morning. That's one of the ones that is in fact up a little bit this morning, and the fundamentals are good. It's undervalued. It broke out of this symmetrical triangle, and there's a very long-term support line here, and on the chart I put up the weekly chart once before. Couldn't resist it when I saw this a huge outside day that in fact encompassed the range of about 2-3 weeks trading, and it's going up very nicely here. So good to see today in a very negative market that it's moving. All right, so that I'm quite pleased with. This is Hilton Foods, and if we go back to the yearly chart, in fact we go to a 5-year chart, we can see that I think this would probably satisfy the requirements of 3 young men in Vectorvest UK who've championed earnings per share kings. Maybe they wouldn't have liked this little bit of a sell-off during February and March, but nevertheless this is a share that's moving up with very little volatility, and earnings per share is growing strongly during the same period, again with very little volatility. Now on the yearly chart, that's the sell-off, and you see the sell-off has in fact been exceeded quite a bit, and it then pulled back to that old top, moved up, couldn't make a new high, and then it comes back and takes out the lows and reverses. Earnings per share quite strong, and volume ticking up as it broke up, so I couldn't resist buying a few of those. It's off a little bit this morning, but I'm not particularly worried about that. That is in fact, for those of you that listen to my work, what I call a Wyckoff spring. And I'm very positive about that. Anything can happen, but I'm very positive about those 2 shares. So that's what I've added. As you can see, there's the volume coming into it down around those lows. So that's what I've added during the week. Now, in terms of other shares to have a look at, I ran my very simple UniSearch, which looks for shares with a baseline of the comfort index above 1.2, so shares that are trending reasonably strongly. I'm looking at FTSE 350 stocks, and I'm sorting those stocks by a combination of CI and GRT. I run the same search in the US markets. The UniSearch couldn't be simpler. It's looking for a share that's trending, and we want to actually bring those shares to the top of the list that have the best combination of long-term trend, comfort index, and projected annualized earnings growth rate, GRT. Now, 2 shares I like the look of, one technically and one with a mixture of technicals and fundamentals. Now, the first one is Just Eat, and the second one is Paddy Power. Just Eat, the Vectorvest rated fundamentals are pretty awful, apart from this projected annualized growth rate, GRT. GRT is excellent, and CI is excellent. The rest of the Vectorvest fundamentals, RV at 1.19 is not bad, but it's on a PE of 113. Not uncommon for a high growth stock. Clearly done exceptionally well out of the restaurants and things being closed, and you take your life in your hands with those little scooters in West London. But that's the search. If I chart those, ladies and gentlemen, I get this chart, and as you can see, it hasn't been listed that long. It's a FTSE 100 company, and let's go to 6 months, and I can see. Let's go a little bit further so we get that blue out of the way. There we go. This share is charting a ascending triangle. Now, my dear friend Thomas Polkowski, who's written a book called The Encyclopedia of Chart Patterns, reckons that that's the most reliable chart pattern in the book. It's gone up once, it's gone up twice, it's gone up 3 times, and it's now trying to break on the 4th attempt on reasonable volume. It's not a day to do anything, ladies and gentlemen, but and the fundamentals here in terms of relative safety are not great. It would not be a worry-free stock, but nevertheless that is interesting. The other one is Paddy Power. Now, Paddy Power has got much better VectorVest fundamentals, and as you can see, RV125, RS125, so this would sort of fit a worry-free type stock. It's on a buy recommendation. It should grow earnings at 20% next year. So if I can go back to that, and there's Paddy Power, folks, and it's a share that's come back from the death. Let's look at the last year. There's the sell-off, and again the sell-off has been exceeded. That says that the share is showing exceptionally strong relative strength to the market, because as you know, the FTSE 100 or the FTSE 350 hasn't come anywhere near taking that top out. So we've got a high relative strength share. Now the share has broken these tops and has come back to kiss those tops and is now moving up again. So that looks interesting. Again, I must reiterate that it's not a day to do anything, but let's say that this market heals, then we would be in a position to look at those next week if this risk turns back on again. That's the VectorVest composite, folks. I've marked the DEW signals. The DEW signals are very positive. Again, we've got this massive divergence on the buy-sell ratio, which is still there. And sooner or later, if it does turn, it's going to turn with a vengeance. So just be very careful. The market is well down today, and although all the measures of the trend on VectorVest are up, the recommendation was caution this morning, and with a open down, a very strong open down on the indices in London and all over Europe, it's a day to sit on your hands. The American markets are off, but not too bad. Let's see what they do when they open. My positions haven't changed that much. There they are, and I would be interested in looking at Paddy Power and Just Eat if risk is back on, and that we get some green lights again on the Color Guard and VectorVest. I hope you find this useful, folks. That very simple search of mine works exceptionally well in both the UK and in the USA. If I go back to the search, and let's say I go back to the start of July, 1st of July, and run the search. The 1st of July is what, 6 weeks back? Run the search, and if I quick test the top 10, we can see in 6 weeks that search is up 10% and the market's up 3.76%, and that's quite something. Clearly the DEW was up, but nevertheless that's quite something. If you test it month by month, it produces exceptionally good results. Couldn't be simpler. Look forward to seeing everybody at our Q&A on Monday afternoon. Thank you.